Hello business stars, this is your business coach with a brand new video on question paper solving series of O-Levels Cambridge Economics Code 2281 variant 22 October-November 2022. So let's get started. So business stars, in O-Level question paper solving series for Economics Cambridge, there is section A and section B. In section A, you have to answer all the questions from a case study. I'm not going to read the whole case study for you, but I'm just reading the first section, which is a table. So in Nigeria and USA fact file, you see US dollars to Nigerian naira exchange rate is $1 equal to 400 naira. This is what we need to answer our first question. So let's get started. So business starts, moving on to question number 1a, which is calculate how many dollars 6,400 Nigerian naira would have bought in 2019. In the table, I had shown you that $1 was equal to 400 Nigerian naira. So the calculation would be 6,400 Nigerian naira divided by 400, which is equal to $16. Okay. So let's move on to question number 1b, which is identify two ways a bank could increase demand for its services. It's a 2-mark question. The first way could be open more branches, and the second way would be carry out an advertising campaign. Well, this question is basically a common sense question. So let's move on to the next question. Business starts, moving on to question number 1c, which is state why a merger between two commercial banks is a horizontal merger. It's a 2-mark question. The answer is they're from the same stage of production and from the same industry. 1 mark and 1 mark. In total, 2 mark you will be receiving. Let's move on to question number 1d, which is explain 2 reasons why a large US commercial bank may charge a high price for its services. It's a 4-mark question. The first reason could be high spending on opening new branches / advertising campaigns. Okay, so this is the first mark, and for the second mark you have to write, so they need to get back cost or to make a profit. The second reason is they may offer high quality services, so customers may be willing to pay a high price for their service. Let's move on to the next slide. Moving on to question number 1e, which is analyze how an increase in unemployment may affect the Nigerian government's budget. It's a 4-mark question. The answer is revenue is likely to fall due to lower incomes. So there will be a lower spending and the government may cut taxes to reduce unemployment, right? So the government will try to cut taxes in order to reduce unemployment. So first mark, second mark, third mark, and 4 mark is distributed. It's a 4-mark question. Let's move on to the next question. Moving on to question number 1f, which is analyze the relationship between countries' average years of schooling and birth rate. It's a 5-mark question. Over here, we can see there's an inverse relationship. On the x-axis, there is average years of schooling. On the y-axis, we have its birth rate. We can see Germany has the highest level of average years of schooling, whereas Germany has the lowest level of birth rate over here, right? The answer is generally there's an inverse relationship. The fewer years of schooling, the higher the birth rate. Okay, so Germany has the highest years of schooling and the lowest birth rate, whereas Chad has lowest years of schooling and highest birth rate. However, there is an exception: Nigeria and Eritrea. Nigeria has more years of schooling than Eritrea, but a higher birth rate. We can see Nigeria and Eritrea, right? So this is how the curve was going, but there's a difference. There's an exception from Eritrea and Nigeria. So let's move on to the next question. Moving on to question number 1g, which is explain whether or not a subsidy given to farmers by the Nigerian government would reduce the deficit on the current account of its balance of payments. It's a 6-mark question. The answer is it should raise supply or increase output, resulting in lower cost, lower price, and increasing international competitiveness. However, it may increase efficiency as farmers may rely on the subsidy. Okay, so let's move on to the next question. Moving on to question number 1h, which is discuss whether or not the US government should impose a minimum price on chocolate. It's a 6-mark question. Before I read the answer for you, remember minimum price is set above the equilibrium price. Okay, the answer is it will raise price, reduce demand, and reduce obesity. However, the poor may not be able to afford chocolate. Basically, a regressive measure is taken and there may be an illegal market in chocolate. So we are done with section A. For business, commerce, and economics tuitions, you can connect with Muhammad Ishtiaq bin Zaman sir at 01685 221141 or email us at thebusinesssstarbd@gmail.com.